Good morning, everybody. We'll get started here in about 14 minutes. In the meantime, let's go ahead and let's jump out and look at our pre-market routine, give you a look and feel of what we're going to be looking at this morning. And I'll leave that up there for you for just a few minutes. And we'll get started here in just a few minutes, okay?
Now, go. Let me say now, Brown sees moving under me.
Order filled.
Little spears out on the sea. Summer smoke up in the sky. This soon we'll learn to fly. Let me hear now. Don't. Now the girl quickly said to me, when you better watch your feet. Love come down soft and hot. You better love me now, I'll love me now. Let me say now, no. Mr. Atlet. But time to count what I'm worth. Cause I just left up and it hurts. Where I go, I hope there's no Gray mountain come. Now, don't. I don't know where I'm going. One more now. Don't. I don't know where I'm going. But that was the land in New York City, the land in Mexico. About 3 miles, 3 miles cannot be. The Comanche sky, Nashville, and I'll see the most and road on the territory. Was out there. Stand the market stand. Go. Just the one more. Sitting in the morning sun, I'll be sitting in the car, watching the ships rolling in. Then I'll watch them roll away again. Yeah. Sitting on the dock of the bay, watching the tide roll away. Sitting on the dock of the bay, wasting time. I left my home in Georgia, headed for the Frisco Bay. I've had nothing to live for. Look like nothing's gonna come my way. So I'm just gonna sit on the dock of the bay, watching the tide roll away. Sitting on the dock of the bay, wasting time. No, gonna change. Everything still remains the same. I can't do what people tell me to do. So I guess I'll remain the same. Sitting here resting my bones. And this loneliness won't leave me alone. This 2,000 miles I roam just to make this not my home. Now I'm just gonna sit at the dock of the bay, watching the tide roll away. Sitting on the dock of the bay, wasting time. Thanksgiving coming up tonight, shining through the tree. Crickets are singing, birds are floating on the breeze. Baby, get ready. Across the field where the creek turns back out of Old Stumble Road. I'm gonna take you to a special place that nobody knows. Baby, get ready. Oh, oh, it's almost over and the summer's come. The days are getting long. Waiting to the right, take you home. Baby, get ready. It don't matter, sit forever, fish don't bite. Jump in, sail from the heat of the night. Baby, get ready. Down the stars, and the red go. Yeah.
Good morning, everybody. We'll get started here in just a couple of minutes. Just waiting for the top of the hour. We're already doing some live stream, so just make sure you got your zone set. Get ready to go. Good morning, Summer.
There will be no
Yeah, good eye, Summer. Yeah, we were looking for George. I did get in a little bit earlier. Oh, there we go. I mean, I set the trade up and it triggered while we were prepping for the morning session here. All right, we're just about ready to start.
together, unite us down the dawn. For when the night comes, there will be no return. Have pity on
Good old Bob Marley to relax the day, get focused.
the Father of creation.
All right, let's go ahead and get started here. Good morning, everybody. We're doing a live stream earlier today. Tomorrow will be a travel day for me. 24-hour travel day. So heading back down to Jakarta. Got some friends to meet and also going to be doing some work down there with the team in Bali. So it's a work adventure. All right. So yeah, we will be off. The Discord room will be open. And of course, if you want to trade with the other students, they'll be available. Okay. For those watching the live stream, if you want to be part of the Discord room, just register on our website and we'll make sure that you get that link out there so that you can be part of that if you choose to. All right. I'm going to come right out to the charts. The what impacts the equity index is most of the time, well, what impacts the equity indexes, period, is, of course, the exchange traded funds, the ETFs. So I have the Qs, the SPY, the Diamond, and the IWM up here as we're watching them, okay? Currently, we have each one of these products, and you can see the IWM gapping up at 220.09, which is right into that first supply zone. QQQs gapping up $4.14, 492.5, right into that supply zone. And much of the pre-market already, the Qs have gapped up right to the sellers, okay? Now everybody's looking at the equity indexes and the markets this morning going, oh my gosh, yes, they're going back up, more new highs, okay? That's possibility, okay? But a less possibility when price is gapping right to a supply zone, okay? SPY also 580.65 last trade. Okay, we're right in the middle of that first supply zone, okay? So
Order filled.
what we have going on in the marketplace right now is that the equity indexes are gapping up right into supply, okay? This will be a little volatile at the open because they'll hang out here just a little bit before either moving out or going through that supply, okay? So what we have to see here is on the equity indexes, everything's gapping up to find sellers, okay? Nobody's willing to sell just yet. So the gap up, they're looking for the opportunity to have orders for selling on the other side, okay? Not many people are buying this gap up, okay? They're looking to sell it. When watching stocks and equity indexes, exchange traded funds and things like that, it's always important to see right around the open where price is gapping up or gapping down into, and then looking over to the left and correlating that with the supply or demand zone, okay? So as we start taking a quick look around, I do want to mention that natural gas had a contract rollover. So your charts may be a little off, right? And there might be a little confusion going on. There is a gap on a daily chart on that gas, and that's due to the contract rollover gap, okay? So be aware that your charts may be a little askewed for that, okay? Make sure you're updating it and so on. We've had a pretty significant move up on nat gas. We made a really big fresh accumulation of orders over several days from the 18th to basically the 24th, okay? And we have found we got the resistance area that I'm just marking off right now, and we have a fresh buy territory, okay? Now, anytime you're trading supply and demand, you need to pay close attention to where the sellers were coming in and where they were taken out and where the buyers were at, okay? Because now we're looking for a demand zone entry, which means that price must come back down to the origin where the buyers were at to jump into the trade. So we have a fresh demand zone 2.314, 2.285, okay? Now, keep in mind, Tuesday next week is last trade date. You know, we often see a nice pullback into that last trade date. Now, that doesn't mean it's going to start today, but on Tuesday, Monday night, Tuesday, if price is back down in the demand zone, okay, last trade date, these are pretty good odds enhancers to get into the trade and then participate as everybody gets out of the front month contract and must be in the back month. Or since it's the last trade date, they're planning to take delivery, okay? Much of the contract rollover happens prior to that, okay? Or sorry, around the contract rollover, we do see those price fluctuations. So price pulling back to a demand zone, and we have those areas a little more defined, marked on a 5-minute chart, and we got a wider range on a bigger scale chart, okay? Let's see. I'm watching heating oil and also crude oil, as the reports yesterday were bearish, a big increase, okay? And we're going to be looking for some opportunities to, the chart says potentially go long, okay? And that's where I'm kind of will look for some trade opportunities. But as I bring up the heating oil chart, which is one of the odds enhancers that we use, heating oil and gasoline tend to move before the crude oil, okay? Is that we made a fresh accumulation of orders. It's a pretty big one. Okay, and made higher lows. So on heating oil, we may start to look for that opportunity. It looks like it's already come back down into that demand, okay? So I'm going to let the markets open just a little bit before I start jumping into trades. Heating oil did come down and touch the demand zone, may continue to move back up. Heating oil is one of those odds enhancers we do use to monitor how crude oil is going to do, okay? So on the crude oil, as we're looking at demand, we did hit that area. We got a little move down here. I'm gonna map that out right there. Okay. Okay, so as far as the open range breakout trade today, taking a measurement of the Globex range, okay, relative to the daily ATR. Daily ATR is 2.75, okay? Globex range is $1.42. When the Globex range is between about 40 and 70% of the daily ATR, we often see that the open range breakout trade can be a little choppy and not as rewarding as having a narrow or a wide range, okay? So I'm just pointing out that I'm not jumping into crude oil as far as a open range breakout, but I'll look for the demand zone down here, 70, 75, 70, 45 in that range. And the opposing supply zone, 73.24, 73.06, or 73.60, excuse me. And I just want to notice a couple of leg base groups of candles where we'll look for potential zones as well. Now, these zones here that I'm marking, okay, just with the leg base, they're not necessarily in the right location for a longer term trade, okay? So here we go. And we have that open range breakout. Price has already tested that, broke down, and there we go. Okay, yeah, I just want to make sure I'm not freezing up here at all. All right, so we have that as the equity indexes do start to open, ES, S&P, inside day. Inside day can be a little more choppy, more difficult to participate in around the session open, okay? And Dow also inside the prior session's range and has not broken, okay? We want to avoid taking breakout trades, okay? Now, breakout trades on an inside day have often not had the best results, Okay, so keep that in mind and look for where we have zone entries. And currently our prep screen zones are just outside of this range. We did have a couple of prep screen zones hit yesterday, and a couple did get run through after they arrived to the zone a little bit early. Let's come back to the S&P for a moment. Looking at the Dow 30 stocks in the pre-market, we're still around the lighter volume in the pre-market. IBM down $9.13. Now that's quite a drop for IBM. So we're going to see a little conflicting. I mean, we saw Tesla just rocking to the upside, but then we see IBM going to the downside. Inside day, things are going to be a little bumpy here at the open. Some traders are going to be bullish, some going to be bearish. On inside days, look for your trade opportunities a little later in the session, okay? Now, an inside day is a pretty simple term. It's just basically, is price in the pre-market and at market open inside the prior session's range? If it is, then we manage that expectation by saying, okay, no breakout trades, be a little more patient, wait for some zone entries, and trades taken later in the session. Okay, around 10:30, 11 a.m. tend to have a better opportunity. Because, I mean, imagine what the floor traders are doing right now. They're trying to find price where they can make a market. Okay, and that's why we're seeing gaps up and we're seeing gaps down, and the markets are all over the place. We got light volume, so it looks big, and people are getting excited to come into the market. Okay, so what we see is behind the scenes and what's really going on with the big banks and institutions around the open is they're really just trying to find the area where we have willing buyers and willing sellers. And the fact that we have such a mix means it may take a little longer to do that. So S&P futures are currently up 27.5 points, okay? So let's take a value of cash. Now, right now we have 6 Dow stocks that are positive over 94 cents and 1, 2, 3, 4 that are negative over 94 cents. That leaves us one positive. We take that number and multiply it by 2 to get a assessment or a value of the cash market. So in the equation, cash equals 2 points, okay? Futures are overbought on the S&P by 26 points, okay? So if we take 26 points away from where we're at now on the S&P, that's going to put us right back down to that gap fill. Now, that's another thing that we look at on the S&P is that, or any of the indexes, is if we open inside the prior session's range, an inside day, gaps often fill the same trading day, okay? So with that potential of the gap fill, we need to take a better look on the S&P right near the session close and where the gap fill is at. Let's open this chart up. And let's drop down to a smaller time frame and locate that leg base. There's one right there. And we do have some action right here. Let's see. It's not that we're looking for the gap fill right away. We're just looking for where there is a zone. Okay. So let's go 6 minutes. And there's one a little bit lower. And what I'm mapping out right now is just the leg base, group and candle. Okay. Since we stated that we're looking for zone entries, usually the zones that are created in the regular trading hours are higher quality. Okay. 20-minute, we'll come back out there. Um. Hold on one second. All right, so let's come back up here and pull back. All right, let's get rid of the blue dots now. Okay, so one of our first trades that we're going to be looking at on the S&P is when it pulls back, does the gap fill? Very often, gaps fill the same trading day, okay, on an inside day. So this is why I'm looking for that direction that price will move back down to that level, okay? Now, sometimes it's going to happen very quickly, and that's where we want to pull up and look at, well, what do we have coming out? Well, at 9:45, we have PMI composite, the flash, okay? And we have new home sales and we have the natural gas report. Very often, if we're looking for price to return to a demand zone or a supply zone, the reaction happens around an economic report, okay? Now, reason I'm saying this can happen kind of quickly is you need to be prepared ahead of time and anticipate how you're going to respond if price drops down and fills the gap, okay? See, it's always planning ahead of time, not trying to make rash trades when the necessity is just, or when price is arriving at that zone, okay? Let's see. NASDAQ, same thing, inside day. And we got this nice little rate, like a rally-based rally right in that range, right near the gap fill. We're anticipating a gap fill, and since we're in opening inside the prior session's range. Let's drop down small time frame and let's nail that that zone. See, the big traders are leaving a footprint with the leg base, okay? I'm going to put the little blue dots on there so that we make sure that we have those marked. And you notice we're not trying to make a lot of trades in the pre-market, okay? Should, looks like my mouse is glitching here. Yeah, if you have a wireless mouse, make sure you always have batteries right next to you. Got one as a backup. Okay, if it glitches up again, I'll change it out. All right, so we have a zone right there. And that's right around where the session closed, okay? And I want to look a little bit further. Let's go to 4-minute chart. 3. You always want to take a moment and look into the areas around that as well. So it looks like that's pretty solid on the NQ. Okay, let's go back out to the 20-minute. Okay, so open that up. Now, with these demand zones and supply zones that I'm putting together this morning here, okay, is that we are looking for price to intersect with a demand zone or a supply zone on the quarter hour, okay, especially between 8 a.m. and 11 a.m. Eastern. Sorry for the little distractions. Okay. So what we have noticed and what we document is that around the quarter hour, price intersecting with supply or demand, we've had a more favorable trade outcome. Okay. Right now, the NASDAQ is hanging right out in a supply zone. And we're just waiting for the session open again. Let's look at a small time frame here. You might want to set this trade out. Actually, we'll wait because it can be volatile around the open here. So I'm going to wait on that one. Russell, we have our prep screen zone above and below, and Russell is also an inside day. And looks like we anticipate the gap fill. And let's find that leg base group of candles. And let's plot that out right there. So it looks like all the equity indexes are looking to come back and fill the gap the same trading day as they're opening inside the prior day's trading range. Okay. Now that is a good, solid nugget of information. I want you to verify that. Okay. Inside days have often been more difficult to trade at the open. Okay. So be prepared. Markets will be volatile, choppy. We had on the Dow 30, we were having a lighter volume. Okay, so we're prepared for kind of that whipsaw action as the market gets ready to open in about 7 minutes. Gold has had a pretty strong drop yesterday and now has recovered probably about 2/3 of that. Okay, we did make a leg base up at top. This is not a supply zone. It's just a leg base group of candles. We might find a little resistance there. If this is going to make a double top with a lower swing high, then we might be looking for price to come back down to demand. Okay. And our natural gas. Okay. Contract rollover. Remember that? We got the open range candle. And we're right there. We're 6 cents, so 0.064. And we got daily ATR is 1.22. So we're about 50% of that. So that means it's going to be a little choppy on the open for nat gas. Same with crude oil. Okay, we're right about the middle range of the daily ATR. Okay, so taking the open range breakout trade is a little more elevated risk. Okay. S&P just went up and hit a zone. It's a small supply zone. Just breaking these down into smaller time frames now. Okay, just to kind of give you a visual of the picture. Inside days, I tend to back away from trying to be really aggressive trading, and I look to trade some things other than the equity indexes. Qs, okay, yeah, because we're going to see a lot of people trying to figure out if they're going to stay or go when the market opens. Okay. And as we're looking at the equity indexes now, you're seeing that, the Dow is doing something opposite of what the NASDAQ and the S&P are doing. Okay. And the Russell is kind of in between. We're also noticing on the 5 and 10-year and 30-year bonds and notes that we're getting a pretty significant pullback. Okay. And let's bring up what we have over here. The dollar, the 10 and the 2-year yield pulled back in the overnight with the economic report. The 10-year and the 2-year yield popped back up, both above 4%. Okay. Now we want to watch this. This is when the yields are moving up. Okay. This is more bearish for stocks. Okay. We also have the US dollar kind of basing. It did have a pullback in the overnight session. Now, in more favorable market conditions for trading intraday, the dollar and the 10 and 2-year yield are all correlated. Right now, you can see that the dollar is not correlated with the 10 and the 2-year yield. Okay. So something's not quite right. It's not that anything's not working. It's just that along with the inside day, we're saying, ooh, let's see how the market opens. Okay. See, as we go through a pre-market routine, we're looking at a lot of little pieces of information to give us the safest, best opportunity for trading where the banks and institutions have unfilled orders. Okay. With the inside day, we're expecting a little choppy uncertainty. With the dollar and the yields going different directions, that's making us feel a little more uncomfortable. Things are not quite right. Now, the more that you study and watch these things, you'll know when to be aggressively engaging in the market, and you'll know when to kind of back away from it. Okay. So as we have kind of as a summary right here on the equity indexes, we're waiting for the gap fill and we're waiting for a zone entry. Okay. Waiting. For the dollar and the 10-year yield, this is also not correlated. So again, it's saying, hey, be cautious and be willing to wait. Okay. NASDAQ pre-market indicator gapped down this morning. Now that's bearish for the NASDAQ. Okay. We also see the NYSE trend was higher, but has come back into the consolidation area. And we see that complacency is still in the market. There's not a lot of fear going on. And with that, we're seeing that the VIX is down about 50 cents here in the pre-market. VIX low, okay, more of the complacency. VIX high, more fear, okay? So as a quick little summary, we are looking more towards the waiting at the session open. Okay. So we're going to be waiting just a little bit on the equity indexes. So let's look at something else. I did set up a trade on corn, and often when we are inside day like this, some other products to trade, something like corn, wheat, soybeans, metals. We're going to look around and the FX and bonds. Okay. Something other than the equity indexes, unless you're just going to watch the equity indexes. Okay. All right. Market is open. I do have a trade set up here on corn, 424.48. We will come back in and place a stop loss at 420. We'll come in at 428. I'll put that in right now. Okay. And let's go. So I'm looking for corn to come up into supply. Once it hits that little level, then I'm looking for price to come back down. Now corn's around the harvest time. So this is more of a seasonal bearish trade. Although the commodities, a lot of them are kind of really cheap. Okay. We still have to anticipate that the harvest and things like that is coming into play. Okay. Wheat is also another one that I want to have set up. Wheat looking at doing a breakout. To the upside, but we do have overhead supply. Okay. So let's change this. We're on a December contract in wheat, WZ24. These are the old pit symbols for this particular platform. If you're using a different platform, it'll have a different ticker symbol, okay? So I'm going to look to set the trade up. When we have that leg candle leaving the zone bigger than the one in the zone. Hi, Miss Chris. How goes the computer battle? All right, but when we have the leg candle leaving the zone bigger, okay, big strong move, then price often comes back and goes deeper in the zone. The zone could be used twice as well. So for wheat, I'm going to look to take the trade about 592 and 18, okay? But we'll come back and revisit that in a little bit. I don't need to tie up the margin that I have. Oh, here we go. All right. So we have S&P. We're looking for that gap fill. Let's get this trade set up. Proximal line entry, 58.42, 3/4. Stop loss, 58.38. Okay. Dow. Nothing on the Dow yet. NASDAQ also set up. Look, the gap fill is a little bit lower in that range. Okay. Now, what we're waiting for on the S&P now is we want to see price arrive on time. If it arrives earlier than the quarter hour, see, we still have about 12 minutes. And if price arrives here earlier than the quarter hour, then chances are it's going to go to the next little zone down below. Okay, it's going to break that level. So let's come back to the NQ because prices were coming down pretty quickly on that. And I want to look somewhere right around in this range here on the NQ just to refine and see if there's a zone a little bit lower in case economic news or something comes out that causes things to be a little volatile. Okay. And we're looking right down here. Okay. Now, just a side note, notice that the leg base group of candles is up a little bit higher from the pivot point. Okay. If you are a student of using Fibonacci measurements and such, okay, most Fibonacci traders will use peak or valley to peak or peak to valley as their measurements. When very often, if you look for the leg base group of candles and use that as a measurement, you're often a lot more precise, okay? So we need to see where the actual buying came in, where the unfilled orders are at, okay? Okay. See, we're expecting that chop here open. Did anybody get the short out of that? I know I was off doing something else. Russell, still waiting. We do have more upticks. So we're looking at prices moving up and we've got more advancing issues over decline issues. So again, things are a little bit choppy here at the open. I want to bring you back to what we have going on over here with the US dollar 10-year, 2-year yield. Okay. They're still mixed. Okay. So you're not missing anything here. Be willing to use and trust your instruments. Getting in and out of trades very quickly is even high risk at this point. Okay. Something's not, everything is not quite lined up for us to get in a trade and sit in one yet. Okay. All right. So we're still about 9 minutes away. And as we're watching the S&P come back down to this gap fill, what led us to anticipating the gap fill? Inside day. Okay. Inside days can be a little choppy, volatile. Okay. But also we anticipate the gap fill highly. Okay. Dow already filled the gap. Russell still working on it, along with the NASDAQ and the S&P. Now gas, choppy here at the open. Crude oil popping up. We do have a little supply zone or a little leg base. Okay. So instead of using the open range breakout because of Globex range compared to the daily ATR, it's about 50%, kind of in the middle. I'm going to look to take a trade short right now on crude oil. And we're going to use 71.40 as the entry to sell short.
Order filled.
And I'm going to use 71.59 as that protective stop loss. Right. Okay, then we have a first target. If it goes through to 70.75, then we'll look for that second target down here. Okay. Opposing demand zone. Okay. All right, so we're seeing the S&P. This is a tick chart. I'm just looking for some details on this. We do not have a topping pattern yet. And it's not that far away from this little leg base right here. Now let me direct your attention to this this price pattern here. Okay, the leg base group of candles, you can see that that leg candle leaving the zone is smaller than the two leg candles in the zone. That often means that price will not go too deep into the zone. It will be a proximal line entry. Okay. We do have, let's see, what's coming up next, a 945 PMI composite. Okay, so right around the quarter hour, we may see that we get some volatility around that. Okay, so this zone, based on the criteria of the leg base, okay, and we also have another one right below that also showing a proximal line entry around that same area. Okay. So I'm looking right inside of this range here as a reaction to that report. That will also fill the gap. And we'll have a trade opportunity. If price comes into this at the quarter hour, we have a trade opportunity. Okay. NASDAQ has a little better basing pattern going on here. And we have multiple touches of support. Okay. We have our leg base group of candles. Right at the session close, and we have another zone just a little bit lower. Okay. And we got Broadcom trading lower. Meta's up. Nvidia. Tesla ripping to the upside. Hard to get that. I think Tesla is all on its own today. Yeah, I mean, if we're looking at the large market cap weighted stocks, I mean, we're the only thing that's really keeping the NASDAQ up is Tesla at this moment. Okay. Let's come back out to our exchange traded funds. You can see that again, just a really good documentation of this is watching the stocks when they're gapping up or gapping down to get a good idea of what supply and demand really is. Okay. In the morning, the market makers and floor traders are trying to make a market. They're trying to find stacks of buy orders and stacks of sell orders in order to match up their tickets and what they have to do. Okay. Sometimes they have to gap price up to find the sellers or gap price down to find the buyers. Okay. So if you understand what they're doing with that, then price gapping up in the pre-market is a heads up, but it's also an indication that they're trying to find sellers to take the other side. Doesn't necessarily mean the market is very bullish. Okay. It's just that all they're doing is trying to match up tickets. The Qs may need to go up, but just a little bit higher. SPY already hit the supply. Okay. On the SPY, we're looking at the leg candle leaving as smaller. So it was only a proximal line entry. And the IWM price went a little deeper. Okay. So you notice even the exchange traded funds are being a little quiet here at just in front of this report. Okay. So price has not arrived in the zone yet. Boy, IBM, wow. I guess their AI, their report on their AI stuff is not doing too well. But you got to remember around earnings and such, a company may come out and says, yeah, the AI business is not so great for us. Okay. But it's good for the industry. That's kind of the wink, wink, nod, nod that the industry is really taking some time to spend the money that they've already accumulated to build and do manufacturing. Okay. All right. So we're about a few seconds away from the PMI flash report. Now, if I have my risk management in place, so if I am stopped out, I may get back in around that 58.42 and 3/4. So if it shoots through that, I'll look for an opportunity to go long lower, or I'll take a confirmation entry as it comes back out. So let's watch this play out here. Now the dollar is starting to move back up with the 10 and 2-year yield. And we also have to keep an eye on the NASDAQ as well as it's coming. S&P is closer at the moment, so we'll watch this one. Very high percentage of the time we get a gap fill when we open inside the prior day's trading range. Okay. Okay, let's use a little tool here to get see where we could get a bounce back up. So we got point A, point B, and point C. And we'll look for target 1 and target 2. And to bounce back up. It's Still needs to go down just a little bit lower to get to that, the gap fill. Notice the time, price intersected right on time. Okay. In Q, we still might be waiting a little longer. Russell, also waiting a little longer. Okay. Not as exciting as I was anticipating, but we did come down. We have some very key pieces of information if you're watching the live stream, our pre-market routine and our information gathering is all about understanding different correlations and monitoring, documenting what's going on the price chart to help us anticipate when there is a trade opportunity. The precision of using a leg-based group of candles has been really quite profound, okay, to see those where price changes direction there. Okay. We got a nice, right now we're at a 1-to-1. Okay. Our next economic report due out 10 a.m. with new home sales. Okay. Then 10:30 we have natural gas, and then later in the session we have the Fed balance sheet. Okay. Did anybody get into that one? I mean, there wasn't a lot to trade. Okay. Nice job, Summer. Make sure you're managing the risk. Okay. Let's move on. Let's see what else we have going on. Let's see, wheat's kind of quiet. We were looking at corn earlier. Oh, nice job, Summer. Grabbed you a quick $200. Yeah, I took a couple of micros, so. All right, let's go. Coming back out to corn, CZ24. The price got really close, but hasn't triggered our order yet. We're waiting on corn. We're waiting on wheat. We have pending orders. British pound is in a zone, but we're going to need to see a stronger move up on the dollar to see that. NQ is coming. Thanks for the heads up. All right, what now? Based on what we talked about earlier this morning, we're still 11 minutes away from the next quarter hour. Okay. Now, this will be key to remember, okay, is that if price comes into that demand zone earlier than the quarter hour between 8 a.m. and 11 a.m. Eastern, okay, we want to anticipate that price is then going to go through it. Okay. So you may get a 1-to-1 or 2-to-1 bounce off of the gap fill and price coming into the zone. Okay. May get that. But if a price arrives into the demand zone or supply zone earlier than the quarter hour, we often see that bounce and then fail it. Okay. So just have a short-term mindset on this zone if it comes in, if it triggers ahead of time. Okay. So we got 291.5. Let's get that order out there. 291.5. And a stop loss at 268. Yeah, it could go pretty quickly through that. Look at a very thin volume on that. And that was around the earnings. All right. Okay, S&P still holding. Looks like it's waiting for the NASDAQ. Russell. Yeah, we're still waiting on the Russell, but I don't need to tie up capital yet. And what's going on with the Dow? Okay. Do you have a prep screen zone on the Dow? They're looking for that 42,500 level. Dropping down to a tick chart to kind of watch what's going on. And okay, 10-year and 2-year yields shooting up. Okay, let me bring that picture back over there. And the dollar's being quiet. Now, all I'm saying right now about this is that things are a little tricky. Okay, a little more difficult for trading. So be prepared. Are we doing okay with that? We're not freezing up, are we? Okay. S&P is still holding out. Now, how are you feeling about the market right now? Okay. It's kind of like I thought there would be more excitement going on, right? Uh, inside days are often like this. So if you know it's an inside day before you start clicking the button, that can help you anticipate the gap fill, can also help you understand that the trading environment may be a little more choppy, designed to take your money. And we might look at other things outside of the equity indexes for some trade opportunities. Let's bring up the British pound. You can see that the Canadian dollar is pulling back. Our crude oil trade is working out nicely. Okay. And I'm going to adjust my stop loss down to about that 71.55, just a little bit lower. And we still currently have $45 worth of risk on the trade. Now I'm only using a couple of micros, so $45 risk. Profit potential, first target, 70.75, 70.45. Okay, so target one. This is where we might find some demand. Okay. And if price goes through that level, then we're looking at target two, much lower. Okay. Nice job on that. NASDAQ. Nope. S&P. Woo, yeah, there we go. All right, we're 5 minutes before the top of the hour. Okay. We now have about a 2-to-1 move off of that demand zone. We're approaching the volume weighted average price. Okay. Now, we have a target, high probability to get up to 58.57, which is, or 58.50, 58.57, 3/4, excuse me. And I'm going to look to, if we get a reaction to the upside, I want to step out of there at, and come in one tick below it. There we go. Okay, and I just have a couple of micros on this. See, the important part is not how much money you're making. It's, did you call the entry? Did we have a methodical way of taking that trade? Okay. What led us to going long at that level? Okay. That's what every trader should be looking at, because some traders have very deep pockets, big trading accounts, okay? And they flash a lot of big numbers, but they never show you how they got into the trade or how they managed it, okay? It's always fun to flash the big numbers, but I'm more interested in how did you know that the price was going to turn at that level? What information was there? And we were going to go look at the British pound. Horn still waiting. And let's go to larger time frame. Yeah, good call, Summer. Inside days, quick profits. Okay. Yeah, this supply zone is not in the best location. All right, so I'm gonna back away from that one. NASDAQ, S&P look pretty similar. Dow, but Russell's doing his own thing. Still an inside day, no breakout trades on the Russell. Looking for a zone entry. We do have a very small time frame zone entry. And that zone was created right around the close. Almost like a little fake out breakout scenario. So let's look to take this as a confirmation trade. We're going to wait till after the top of the hour in 2 minutes. Okay. These zones have already been used. And we're going to look for price to come into that zone, and then we'll take it as it starts to leave that zone. Okay. Or we'll be looking at taking that breakout area. Well, actually, no breakouts until we're outside day. So we really want that zone entry. How we doing on crude? Okay, crude oil. Getting a little bounce off of the Globex low. Okay, still waiting for the NASDAQ to drop down. We got about 2 to 3 minutes for the NASDAQ to trigger an order entry. And we're still looking for our bounce on the S&P. So I like all the feedback. There we go. If you have questions, put them in the chat. I'm happy to answer those questions. We have a awesome team that keeps me aware of all those questions so that we can answer. Don't hold them back. Okay. Just ask away. All right. So we have the new home sales came out. Yep. I'm not really concerned about the number. I'm just concerned about the time for when price arrives at supply or demand. How'd the Russell do on that reaction? Quiet. All right, come on back down, crude. So what do we got? We have crude oil and the S&P. Just small trades right now. Look at these equity indexes. Do they feel choppy to you? Non-directional? Okay. So what I want to reiterate is price inside the prior day's trading range, we often see this back and forth. Okay. It's a decision day. We had some great news came out on the some stock earnings, and then now they're just waiting to see what's going on in there. Okay. All right, come on up there. Now, let me point out something here while we're watching this trade here. The tool that I was using was called a Fibonacci price extension tool. Okay. Where you click in 3 points, like A point, B point, and C point. Okay. The lines that I have modified on here, okay, is that I have a place for an entry, which is about, I have it set at 13, and then I have 50 and 100, okay? And of course, the zero line is my stop. So what happens many of the time when you have that ABC pattern or that setup is that 85% of the time price hits target 1 and 40% of the time price hits target 2, okay? So those were the levels that I was looking at, target 1 and target 2. That's how I assessed that. Purely mathematics, price getting a 50% bounce up, point A being down below, B and C. Okay, so 50% of the AB leg added to point C becomes target 1. Now, I don't have a zone to flip the trade over and take it back the other way. I'm just looking at a high probability trade setup. And just a little bit more to get our target 1. Of course, it never happens when you're watching it, right? Give us about another 30 seconds. Anybody still in this one? Okay. Little drop here. NQ trade is still available, okay, but we're waiting on it. Still waiting for that gap fill. Nice job, Greg. Crude oil. So let's do that same math on here. We have point A, point B, and point C. Target 1, 70.82. Let's just put a couple lines on here. 70.82. And then target 2. There we go. Just doing it by the math. But the math doesn't always work all the time. So what we need to do is pay attention to the zones as well. Okay. I mean, price only changes direction where there's an imbalance of orders. A couple of small successful trades. Russell never gave us an entry. NASDAQ, we're still waiting. And Dow's kind of quiet. Okay. Crude oil. Nat gas, very quiet. Contract rollover today. Volume is a little lighter on this right now. Globex range compared to the daily ATR opened at the pit at about 50% of what the daily ATR is. So we anticipated the choppy action going on here. Okay. Look at that. S&P came right into that little area, that zone, popped out. That's where we took our trade. If you drop down the time frame to the smaller time frames, you can see the little areas in between as well. And what do we got doing on NQ? Nothing. Although we got that price pattern here where we have resistance. Price took out the sellers, came back down looking for some buyers. But we still haven't done the gap fill. Yeah, but like base. I'm gonna be willing to wait for that gap fill. All right, so IWM looks like we just almost barely filled the gap. And we're still waiting for the Qs to come up and find supply. SPY, checking to see if there's more sellers up here, and the diamond kind of all on its own today. Inside days, okay? Wow. Kind of makes it tough. You know, we're looking for trade opportunities, but we can go and look at a few more. Let's start with the agricultures. I'll work my way up. Just looking at the larger time frame. On wheat, still looking for price to come back up and find the sellers. Soybean meal. Interesting. Soy meal just came back down into that demand zone, a second test. Let's drop the time frame down. Now, how do we know if the zone can be used twice? Well, I have a zone marked right here. And dropping down the time frame to find which time frame gave me the leg base group of candles. Yeah, it looks like on the 20 minute. Okay. Leg in, base, leg out, base. Okay. So we have that leg base group of candles. Okay. Notice that the leg candle, the multiple leg candles leaving the zone. Okay. And the way to start training your eyes to see this is just take all the leg candles leaving the whole range. Then compare that to the leg candle in the zone, wick to wick. Okay. In this example, we can see that the leg candle leaving was much bigger than the leg candle in the zone. Now that just simply tells us we can use the zone twice. Okay. First test is usually just a proximal line entry. Price does not go too deep into the zone. The second test of it says price may go a little deeper into the zone. Okay. So on soybean meal, we're trading the December contract. And when we talk about going deeper in the zone, I take a measurement of the from the distal line to the rally, and I'm going to look right around where that 88.6% retracement's at. Okay, it's right there. So I'm going to be willing to take this trade a second time. We have about a 2 point or a little less than a 2 point risk on the trade. On soybean meal, we're going to enter at the market,
Order filled.
and I'm going to place my stop market order, my protective stop loss down at 311.80. Okay. I have about $130 worth of risk. Okay. And now that price is in the zone and gone deeper, you could also look at taking this as a confirmation entry when price leaves the zone. Okay. Crude's looking good. S&P kind of quiet. I don't know what's going on with the Dow. NASDAQ being choppy. And the Russell's back down to support. Okay, good lesson right here. Okay. We have an upcoming class, which is Mastering the Charts Part 2. Okay. Mastering the Charts Part 1 helps you understand, what support and resistance and how to get our foundational course put together. Okay. So Mastering the Charts Part 2 is looking at structures inside either a potential buy territory, okay, and using these structures as kind of a roadside, okay? So noticing how this structure is set up at this moment, price has made a higher high. It has not broke out yet, so we're speculating, okay? But if price made a higher high and then we made that higher low off of that support, okay, we could look for price to come back up a little bit higher, okay? Now we haven't hit supply, okay, and we don't have a demand zone yet, not until it comes back down to about where the gap fill is at, okay? And on this tick chart, the gap fill is right down here about 222 or 22.28. Once price breaks that support, we can see that right on the other side is where some leftover buyers are at, right? Or the picture, the gap fill. Let's just put that line on there where the gap's at. How about that? We got that leg base group of candles right now. The leg candle leaving is smaller. So this should only be a proximal line entry. Okay. So understanding what's on the other side of this potential breakout trade, and Russell is still an inside day, so breakout trades are a little more risk. Okay. So we're looking for price to break out, kind of fake it out, and then shoot back to the upside. Now, this area right here is a particular interest as well, because you look over to the daily chart and you can see the daily 50 simple moving average right here. Price closing below the 50 moving average is going to be really bearish for the market. Okay. Price bouncing off of it can provide some really good trading opportunities. Okay. But since the Russell is still an inside day, we are looking for a zone entry only. Okay. We're not looking to take the breakout trade. Okay. Also with the zone or with a higher high before the breakout, price often goes a little deeper into the zone. Okay. And we have another leg base. So we're looking for that reaction back up to these levels here. Okay. And as we just take a smaller snapshot of that. So we're going to participate in this trade. Okay, I realize the risk is at 28 down to 22 is 6 points, or basically 5 points worth of risk on the trade. We're only looking at a proximal line entry. We're not looking for price to go deep into that zone. Okay. I'm going to start with, we got 2 micros on here. And let's come in right about that 228. We'll look to go long. And I'm going to place my protective stop loss at 222. No, 223. There we go. Okay, so we do now have a sell territory. Crude oil still working out for us. Good question. Summer's asking, gap filled means it's from the opening to the prior day, okay, closing. So what I'm looking for is I have these lines on here, they're called session breaks, okay? Let's go back over to the Russell here. Session break. So this is where the session ended at 5 p.m. Eastern and where it reopened at 6 p.m. Okay, so that's where I'm looking for that gap fill. Okay. Right, that last candle right before the 6 p.m. open. Okay, I'm using that candle there as where we're going to look for that gap fill. Now, there are several ways to do that. Some people like to use the 4 p.m. close for the stocks, 4:15. Okay. But the times have changed a little bit on these equity index futures as far as they go. So it's not they don't necessarily close at 4:15 anymore. They close at 5 p.m. and then reopen, okay, at 6 p.m. Wow, right back into that choppy mode. All right, we did a deeper retracement entry, just as we were talking about over here. Stop loss held so far. If you're not in the soybean meal, okay. Thanks, Kenneth. Did you make some money today, Kenneth? Too many zeros to type? Okay. Well, we picked up some good lessons today off of these things, yeah. Markets are really kind of choppy here, especially on the equity indexes. Now, there's no reason to take a loss on this anymore, so I'm gonna either I take the money or I wait this out, but I'm gonna move my stop loss up to a break even. Okay. Markets are just getting really choppy. All right, let's take a quick look out here at, okay, now we're going to start to see notice that the 10-year yield is creeping up a little bit higher. Dollars coming into play. getting choppy, but things are starting to align. One of the other things that we talked about earlier was the waiting a little bit longer when we start off as an inside day. Okay. So inside days can be a little more choppy. Okay. We've established that. We've got to notice that. The better trades tend to happen a little bit later in the trading session. Okay. And we're starting to see how that plays out. Now, these are not opinions. These are things we have documented. And what you realize as a trader is the things you document are the ones and you validate are the ones that you rely on. Okay. So when you're looking at markets and putting things together as far as assessing the trading environment and so on, you need to have your facts in line. Okay. What was there before the market went choppy? Okay. Well, we had an inside day. Well, we had great earnings. Everything's good. Okay. Well, that takes you out into the realm of the novice traders. Okay. But when we're looking at the actual price chart and we see day in, day out, that when prices opens inside the prior day's trading range, okay, that the market is more choppy. That will help you prepare your day much better by managing those expectations. Okay. There we go. We just hit target 1 on crude oil. Price is arriving at that zone earlier than the quarter hour. Okay, so if it hits that, or 1 tick above it, okay. So when price arrives, again, a nice little nugget of information. When price arrives in a demand zone or supply zone earlier than the quarter hour, okay, we often see price go through that level. Okay, so what would be a good clue to kind of hold on, not just exit the trade right away now? Using that information, I can say, well, let me give it a minute or two. Okay, because we got 6 more minutes till we're at the bottom of the hour. So that means price has touched that demand zone, okay, earlier than the quarter hour and has a high probability of running through it. Okay. Now, there's nothing wrong with taking a profit when it feels good. There's nothing wrong with taking a profit at a predetermined price level. Okay. But getting an understanding of when price will go through a zone versus use the zone to start a new trend, we can use a time element between 8 a.m. and 11 a.m. Eastern time. We often see that if price arrives at the demand zone or supply zone on the quarter hour, the probability of a successful trade is much greater. Okay. If it arrives 4, 5, 6, 7, 8 minutes early than the quarter hour, we get a small bounce and then price often goes through that area. So what this is doing for me right now is saying, okay, we know what we've documented. Just let it work. Okay. Now, anytime you can take a profit. Okay. But knowing if you could stay in the trade longer, you plan for that. Okay. But there are pieces of information on the chart and outside the chart that help support those decisions. See, I often listen to a lot of different traders speculate about the market. And so many of them will tell you exactly where things are going, where they're moving, and so on. Okay. But they never tell you why. Okay. Yeah, we think the market's going down, market's going up. Okay, but they never tell you why or what to look for. So at the market institution, we're a little different that way. Okay. We like to give you the reason why behind it. Okay. All right, yeah, the 10-year yield, 2-year yield, dollar, they're really kind of flat and mixed right now. Looks like our S&P or ES trade is doing okay. 3 minutes to the bottom of the hour. Nasdaq's coming down pretty good. Let's since Nasdaq's coming down, that's going to pull the S&P. I'm going to step out of the S&P.
Order filled.
And I'm going to prepare to take the Nasdaq trade. We already have our order setting out there, I believe. At 2091. Yep. Now we just need it to arrive on time. Yeah, I hope you guys all, I hope everybody enjoyed what they're seeing in our live stream. If you have questions, if you want to talk to our team, just give us an email or email us. All of our information is on the website, themarketinstitution.com. We're happy to work with you and yeah, we're just glad you showed up. Had a good. Let us know how you see things and how you feel about it. We do have some courses and classes coming up, and would like to make sure that everybody knows about that. Okay, come on, NQ. Ah, yeah, natural gas time. Hey, let's come out to natural gas right before. Now, I do want to make a special mention, and thank you, Miss Chris, for putting out the natural gas report on our Discord room. Okay. Looking for the forecast to be decrease in surprise, so a little more bullish. Okay. Now the average move is about 6.5 cents up or down. The reaction, which is right about what we have here as far as that goes. So we'll look for the reaction candle. Price dropping lower. Excuse me. Find that demand or shooting up higher to find that supply. Now, often we have a bullish report that comes out, okay, price will drop to find the buyers. The average move over the last 111 weeks, okay, Ms. Chris has been doing this for over 2 years now, but over the last 111 weeks, the average move is roughly about 64 cent or 0.65 cent, sorry, 6.5 cents down to find demand or the reaction of that, or shooting up to find that supply. Okay. So I want to look down. You can see that this lines up with nothing. Okay. Maybe the old resistance area for that little bounce, but there is no leg base. Okay. The price just bounced off of that. With a potential bullish report, you get that move down, price came down to that old resistance as new support, may give us an opportunity to go long back up to that supply. Things can be a little more different, little more tricky when you're doing contract rollover on the same day that the EIA report comes out. Okay. So let's wrap up our session here. there we go. Price arrived in that demand zone earlier than the quarter hour, and now we're seeing price push down a little bit lower. A great little nugget of information. We had $45 worth of risk on the trade, and now we're up $216. Okay, that's a little better. Well, that's a little better than a 4-to-1 return on the capital right now. Okay. Target 2 has a 40% chance of achieving that way. Target 1, 85% of the time will hit that. Okay. NASDAQ has not made our entry yet. Russell has not. Sorry, let's get the regular chart. Russell has not. And the S&P just kind of hanging out here. Okay. I hope you enjoyed our session. Please like and follow. And we'll see you next week. Okay. I'll be broadcasting next week, starting Monday. We'll be broadcasting from Jakarta, Indonesia. And then the following week, following couple of weeks, we'll be over in Bali doing broadcasting from there. So have a great time. Okay. I'll see you guys on Monday. Remember, we're closed tomorrow. Have a great day, everybody.